Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.
Welcome back. You're watching Traders Corner, Summit's warts and all trading show, and as always, I'm joined by Garth McKenzie, the founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, it's been a bit of a bloodbath on markets. I think particularly emerging markets. What is your sense of what's going on at the moment? And this kind of leads into one of the short trades that you've got open, which is of course doing well under the circumstances.
Yeah, that's right. Yeah, we're making money on the short side today. Look, when we spoke about the volatility in the markets last week, we looked at the average true range of the top 40, and we showed that it's currently around about, more than double, nearly getting up to nearly triple what it has been over the last year. In other words, the volatility, the daily swings between the highs and lows on the market are 3 times greater than what they have been over the last year or so. Even today, we're talking a day where the top 40 is down by over 1,000 points again. And we've seen quite a few days where we've seen these massive swings of in excess of 1,000 points, either up or down, over the last couple of weeks, really. And I think that is indicative of the uncertainty in the markets at the moment. And it's been with us for some time. And we said at this stage, when we looked at that massive volatility, it sometimes can be a precursor to a little bit of a change of trend.
Yeah.
And maybe that is what we're seeing here. It's certainly very uncertain times, and I'm finding the market quite difficult to trade from day to day.
I don't think you're alone, and one gets a sense there's some sort of seismic shift happening. Whether or not that actually will prove to be the case, that certainly is the mood.
Well, it is, and I think we're going to talk about that more on the show today. We're going to look at the emerging market currencies, and we're going to look at the emerging market bond yields, and particularly our bond, and just see what's happening there, because it does kind of feel as if there's a big theme change happening at the moment, and we're obviously feeling the brunt of that on our market.
Okay, well, that sort of leads us into the short position that you have open on the portfolio, and that's Anglo-American, which until recently has been quite frustrating, and yet today it looks like it's heading sort of to where you want, towards where you want it.
Yes, it certainly does look like it's working quite well for us today. So the chart of it is up on the screen at the moment. This is going back over the last 5 years or so, so it's quite a long-term chart. What you can see there is that there was this big area of support at 240, and you can see various different pivot points over there where the stock bounced off that level many times and it found support. But once it broke below that in about March of this year, we've now seen the stock actually consolidating underneath that level. And it seems to be battling to make any headway back above the 240 Rand level. So, for me, that still looks quite concerning, and I still think that consolidation ultimately could break to the downside. What we've done for the portfolio a few weeks back is we went short of 390 CFDs at a price of 231 Rand 90. That was basically on the fact that the stock had been up to that resistance line, failed, and it was turning lower. Now it's been bumbling up and down in a range between about 215 and 240 odd over the last month or two. I'm still going to sit tight though, because to me that looks as if it's potentially like a little bit of a bear flag type of pattern that we're seeing on the chart of Anglo-American there. And the thing that you've got to remember here is, think about this from the perspective of the longs versus the short. If you are long of this stock, anybody who's been long of Anglo-American at any stage in the last almost 4 years is now losing money, and the frustration levels are increasing. There are challenges for this company at the moment in terms of weakening commodity prices and so on. And I just think that the propensity for a frustration, almost like a flush out
capitulation,
of all, capitulation or a flush out of all the stale longs in this share is still very possible. And if we do start to see it breaking out underneath the 215 Rand area, then I think it's very likely that we could see an acceleration of the downside back towards 200 or maybe even lower here. So for the moment, I'm happy to stay short in this stock. Our stop loss would be a convincing move above 242 Rand, which hasn't happened. We haven't seen the stock closing above that level yet. So for the time being, I'm happy to stay short here. And I think it's quite a comfortable place to be in our market, given that it is a bit weak at the moment. And this is the resources sector is weak, and this is probably amongst the weakest shares in that resources sector.
Yeah, so you said 200, possibly the next level, and then potentially below that. But if it breaks below 215, would 200 be the next level down?
Well, I think so. Your round figures do tend to attract a bit of interest quite a lot of the time. So I think I'd certainly look to bank profits on this short position on a move down towards 200 if we saw that. But we need to see the 215 Rand level taken out first, I think, to open an additional leg of selling pressure. If that doesn't happen, then perhaps I'd bank profits around 215. But I need to see. The thing is, I think that this is, if you're going to be short in our market, I think this is actually quite a good place to be short at the moment.
Well, I suppose traditional wisdom would have had it at one stage that a very weak Rand would have been good for the resources shares. But one of the reasons why the Rand and the Aussie dollar and the Kiwi dollar were weak is because they're to some extent commodity-related currencies, which is obviously, and the commodities, as you say, are under pressure. So though, Garth, maybe you want to sketch for us your thoughts on the Rand, this emerging market sell-off that we're experiencing at the moment, which seems to have swept everyone in its path, not just South Africa.
Yeah, it certainly has been. And I think it's interesting because we've noticed the Rand that's weakened sharply over the last couple of weeks. But I think for those that are not aware of it, the rest of the emerging market currencies out there and commodity currencies have also been under a lot of pressure. And I want to just have a look at this cartoon by Zapero, which was in the paper about a week or two back. And this was basically after President Jacob Zuma's press conference, in which he didn't really say much, and it just was kind of a coincidence that the Rand weakened quite sharply on that day. And a lot of people said, oh, it's his fault that the currency's weakened. And hence the cartoon here, you can see that the springbuck representing the Rand on life support, and then the following caption after the speech is basically that it's dead, and that represented the Rand.
South Africans very good at gallows humour, I have to say.
Absolutely. So, amusing as it wasn't entirely accurate, and I think Jacob Zuma did take a little bit of a bad rap for that, unfortunately for him, and it wasn't perhaps fair because a lot of the emerging markets currencies and commodity currencies took a big hit on that day as well. And I want to start by looking at it. First of all, let's look at the Rand-dollar exchange rate. And we've covered this a few times recently on the show. But what you can see is there is definitely a very convincing weakening trend of the currency over there. And we identified this little triangle pattern on the Rand a few weeks back, and we said that if we were to break out beyond the top of that triangle pattern, then it would open another leg of selling pressure for the Rand. And that's exactly what has happened. And you can see that we've actually seen the currency weaken by 15% over the last 5 weeks or so. So the Rand has taken a major hit. And there's clearly been an exodus of foreign money out of our market, particularly out of our bond market, which we will address in a couple of slides' time when we look at the R186 bond yield. But let's have a look then at some of the others. Let's look now at the Australian dollar versus the US dollar. Well, that's right. So you can see here, since the middle of April, really the Aussie dollar has also lost about 10% in the last 6 weeks or so. So not quite as bad as the Rand, but nonetheless, a 10% movement, to the weakening side for the Aussie dollar is a big move. And they're also a relatively commodity-dependent currency. Let's look then at the Brazilian real, which is also quite a commodity-dependent currency. Also an emerging markets currency, obviously the part of the BRICS contingent, Brazil. And here again, you can see that over the last 6 weeks or so, the Brazilian real has also weakened by 10%. So there's quite a common theme here of emerging markets and commodity market currencies being smacked, and the Rand forms a part of that basket.
So when we talk about a seismic shift in the market, it does look as if money that had done well out of emerging markets for the last few years is now getting withdrawn. Where's it going to, though?
Well, that's right, and I think that it's possible that we're starting to see a sea change here and a big theme change. Emerging markets have been the place to be in terms of getting yield over the last couple of years. If you think about the US, where and a lot of your developed economies where interest rates are at extremely low levels, you get no yield in those markets, and a lot of that money, global money, has had to seek out better yield in other places, and it's been moving to emerging markets like South Africa, like Brazil, etc., where the yields are better, but then the risks are also higher. And this sudden move in these currencies has kind of come about at a time where you're seeing increasing rhetoric that the US Fed might look to start tapering off the quantitative easing. And there's two schools of thought here. One is that the withdrawal of that quantitative easing will withdraw some of the liquidity that's been injected into markets, and that could be a bad thing. But the flip side of that argument is that the reason they're feeling confident enough to start tapering off the quantitative easing is because there actually is some real growth happening in the US and some proper, genuine recovery. And if you look at the data in the US, it seems that that is the case, that there actually is some life in the US economy and things are starting to improve. There is growth happening there. And you look at the US bond yields, their bond yields are starting to tick up. They're sitting at the highest levels that they've now been for more than a year. So what I suspect is happening here is that some of that money that has been in the emerging markets seeking higher yield is now making its way back to the US, where it can now start to attract some sort of a return. And the outlook is starting to improve for that. And hence you're seeing a very, very aggressive move away from emerging market bonds. And you can see it in this next slide here that I've got, which is our R186 government bond. This is a bond that matures in 2026, so in about 13 years' time. What's happened recently is that the bond yield has moved from 6.5% in the middle of May, and it's currently at 8.25%. Now that over a period of about 3 weeks, that is a massive, massive move in the R186.
In fact, it went over that bond today. Went over 8.3% at one point.
That's it. Now the thing to remember here is that bond yields move inversely to their price. So where you see a government bond yield moving up like this, what it implies is that the price of that government bond has been falling aggressively as sellers exit. So what I think it's reflecting here is major foreign selling of our government bond market, and this is not just an exclusively South African story, it's happening around the world in emerging markets. Massive exodus out of our bonds, and that money likely making its way back into the US. So it kind of correlates with the weakness that we're seeing in the rand at the moment. And one wonders whether this is not a theme that's still got legs to play.
In other words, you're saying that this rand weakness could conceivably continue. In fact, I thought Franz de Klerk, also a technical analyst who comes onto Summit, says 1050 might be the next level for the currency.
Look, I think 1050 is not that far away now. It's only a couple of cents away, so that's very feasible that we could see that. It's always very difficult, I think, to try and call the top in the rand, and particularly when you get a blowout type of move like we're seeing at the moment. So I don't know if it's going to be 1050 or 11 or whatever what it will be. It's very difficult to say. At some stage, I think we will see the rand starting to recover somewhat and some sort of it'll settle down a bit. But on the whole, the trend for the rand is still very much weaker. And if you look at what's happening in this bond market, not just here but globally, it kind of seems as if there is a theme moving away from these emerging markets, moving back towards the developed markets where things are starting to recover.
Yeah, which is going to make it very difficult for us, isn't it? For our stock market can just get swept up, and that seems to have been what happened today. You saw the rand hedges, which SAB Miller, even British American Tobacco, Richemont's, which have traditionally done well when the rand has weakened sharply, also got sold off today. So maybe there's just everything's being lumped into the same basket and just getting sold off indiscriminately.
It seems that is the case at the moment, that there is a shift away, as not just from our bond market, but potentially also from some of our equities that have really done very well over the last year or so.
Yeah, okay, so this is sort of the overall picture, and it's quite a sobering one. Garth, what does your portfolio look like? Actually, not bad at all in
the context
in the
of things,
of
not bad. I mean, and obviously I'm not doing another trade this week. And viewers might be saying, cheeky, it's been a long time since you put on a trade. But there's a saying in the trading world, when in doubt, stay out. And I've largely been in that camp for the last few weeks. We do have that short position on Anglo American, which I mentioned, and it's working nicely for us. We are in the profit there of nearly 4,500 rand on that. And then we've got our other positions, which put spread structure, which is due to expire on the 20th of June with the futures closeout. Anyway, in summary, our portfolio is sitting at just over 277,000 rand, so it's up almost 11% for the year to date. And bear in mind that the JSE All Share Index is now only up about 2% for the year to date. So we're actually looking okay.
Relatively speaking.
Yeah, on a relative basis, not too bad actually.
Well, if you could translate this for the second half of the year too, you'd end off with a 22% return. That's not too shabby either.
Yeah, that would be nice.
Hopefully.
Yeah.
Garth, just before we get to your courses, one point that we haven't made about the CFD position in Anglo American is that you actually get paid interest for it, don't you? So you're also earning some money there.
Correct. When you trade a leveraged instrument like a CFD, you actually, if you're long, you pay interest, you pay a financing cost on that long position. However, when you are short, you actually receive interest daily on your short position. It's not at a very generous rate. It's at about 3% or something like that. You receive interest, but nonetheless, it's just something to bear in mind that you do actually get a little bit of a return on your short via the interest cost.
Yeah, better than a kick in the teeth.
Yeah.
Any upcoming courses?
Yeah, I've got another CFD course on the 4th of July in Johannesburg. So anybody that's interested can email me, garth@traderscorner.co.za, and I'll send you the details.
Great. Garth, we have to leave it there. Thanks as always for joining us on the show. That's Garth McKenzie, founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.